Okay, let's get into the stock market technical analysis. I've already put out a public or a private member video on market insights and trade ideas. So this one's going to stay to the broad markets mostly. Let's drop right into it. If you're interested in the private member group, link in the description below. All right, so triple Qs, guys. I'm looking at the daily chart here. We have rallied up into that resistance zone right there. And again, I've talked about, that's why this reaction right here just didn't seem right to me, because it was like a perfect tag of that resistance zone. And usually when you have such an obvious level like we do here, you're either going to undercut it or overshoot it. So they gave us a perfect tag, and I was a little suspicious of that. Boom, there it is today. We've basically overshot it now. We are, basically chopping within that range. So this is about as high as I think it could go or should go. If we continue to go up, and especially seeing daily closes, getting higher daily closes, I'll look to stop out of that short position. Okay, so that's it. Otherwise, and I'm not saying it's going to do that, because it is very objective as a short right here and now. All right, I do think that, this is the area where it's running stops, and it will likely reject. That's what I'm looking for, is a rejection, and down we go. So risk reward, it's a very favorable short right here and now, because if it continues to go higher, maybe you let it go 1% or so and you can stop out. But if it stops right about here and heads down to the next target, which is all the way down, basically the 200-day moving average, but let's just say 403, 402.50, then from that move all the way down is about 7.5% or so. So you got a 1% risk for a 7.5% gain. Mathematically, risk reward is very good there. So I think that makes sense. Now, if you've been in the private member group, you'll notice, and let me drop down to the hourly chart. It's been a very volatile week. And again, that's expected. This week was a major week of large cap tech earnings and the Fed. So the most volatile week, essentially, of the earnings season. All right, so if the trade that we've been playing, I've been calling for a top in this range. So far, that's been accurate. We got the big drop here. Okay, I flipped long, and I completely told the private member group in advance. I flipped long there on Friday, the 19th, for a bounce. We did catch that bounce. I started going short again. I don't exactly remember the exact time. I think it was right in here on like Wednesday or Thursday. Started to go short. I believe it was Wednesday again. And then that was accurate. We did sell down. And then right ahead of the Fed, I let the private member group know that it made sense to lighten up on our short positions, because it's a high volatility event. So we lightened up on our short positions. And then, boom, as we got the rally, I let the private member group know that I was looking to reshort the post-Fed pop, and let them know exactly that I was reshorting. Okay, boom, that sold down. We were profitable there. And then right ahead of Apple earnings yesterday, I said made sense to go light on our short positions again. So I tapered down my short positions down to 50% right ahead of Apple earnings, and boom, gapped up. So those half-size positions are underwater. But in general, we've pretty much caught all this. We caught the downside, we caught the rally. Okay, we caught some more downside. We caught more downside after the Fed, and then we lightened up. So where are we now? Well, you can see they're battling it out right here and now. If I look at the PPO, look at the RSI. Let me kind of zoom in here. We're just barely hanging on to negative divergence. You can see we're just right there. So it's almost an equal high on the momentum. Let me zoom back out. And we're obviously, there's the former high, and we have a higher high in price with an equal, slightly lower high in momentum. The PPO clearly has lower high. So we do have negative divergence on the hourly chart. We go much higher, we're going to burn through that divergence. So that's why I think they're battling it out. You see those super narrow candles. So I'm thinking that this is the top of this move, and for kind of this post Fed Apple move, basically, and we're going to start to roll over. All right, that's what I would be looking for. And again, if we don't, we continue to go up, we're going to burn through the negative divergence on the hourly chart, And if that happens, I think it's very probable we're going to head to the top of the range and probably break out. All right, so that's how I would be treating that one. All right, so just to be very clear, we start getting daily closes higher, daily closes, not intraday, but the daily closes higher, then I'll look to stop out of the current half short position that I'm in. I'm not adding to that short position. It is very objective, but I'll look to add on a rejection. I want to see price action reject about right here. Get that red candle of a rejection, and that will be the sell trigger I'd be looking for. Okay, so let's look at 10-year Treasury interest rates, because again, this is pretty much what the market's been trading on, is what the Fed's going to do. It's all about interest rates. Is the Fed going to cut? Is the Fed going to cut? When's the Fed going to cut? The market's really just zeroed in on cuts. It needs cuts. It wants them. If it doesn't get them, it throws a big fit. So the interest rates, the 10-year Treasury interest rates, is in an uptrend. Clear and obvious uptrend right here. That trend has not been broken. Even today, even with Apple, even with the Fed this week, there is no change, no technical change in the trend. The jobs report came out weaker today, so the market said, yay, we're going to get interest rate cuts. But the 10-year Treasury, all it did was drop to support, all right? Drop to support, and then, the buyers have been stepping in there. So until this trend has changed, there's no change in the market, which tells me higher interest rates, okay? The trend is up in interest rates, higher interest rates, lower markets. And that's just another indicator why I think the triple Qs is the price action that we're seeing today is stop rating price action. It's just running stops, getting ready for the next move lower. So I'm trying to anticipate where the next move is going to be. If I go back to the triple Qs, if we get the downside, if you're not positioning now, then you're probably too late. You don't want to be shorting when the market's down here dropping a bunch. That's not the time to be shorting. That's likely the time to be looking for a bounce. But if you need to wait to see that way down here to say, oh, okay, now I need to get out, it's just you're kind of behind the eight ball. The market's kind of front running you. So, all right, that's it. I got that. That's what I got on the 10-year Treasury. Just going back to that chart. If the interest rates break this trend, then technically something will have changed, and we'll have to take a look at that. But as of right now, no change in trend. Looking across like a gold miners and stuff, they're taking notice that there's no change in the interest rate trend. So in general, they're not rallying. Okay, they're basically flat. Today's kind of a flat battleground day, it seems like, but watch those interest rates. Very, very key. Okay, I'll give you guys this trade. This trade's already played out, but in the private member group, it was a short-term trade. But if I go down, earnings, Eli Lilly reported earnings. They popped way up. I talked about not having a position ahead of earnings in that one. But the trade, and this is the trade that I saw, if you look at the hourly chart, all right, here's the earnings pop. And then I could see how it was holding this little plateau shelf. So I figured if we break that support, we should go fill this gap and back down to that trend line, that major trend line. That was the trade. I pointed it out in the private member group to look for just a short-term fade of that. And that was a drop of about 4% on that one. So trade's done on that short-term trade. But if you look at the daily chart now, we have a clear support line on the daily chart, holding that support right there. There's a reaction here, right there. And the next sell signal will come on a break of that daily trend line support. You can see we're basically just kind of bouncing off support today. So no sell signal yet. We'll keep an eye out for it. The negative divergences that have been building for a while tell me that it's coming soon, and we'll be on the lookout. I'll wrap up with this one. If you guys want a trade, it's a good trade idea. NTR on the daily chart, clear downtrend line here. All right, very obvious downtrend line on this daily chart. Recently, though, it's been building some bullish divergence. That's been building for a while now. So each new low, divergent low, divergent low. So there's definitely bullish momentum that's been building. It broke out of this trend line, but it's been basically backtesting. All right, this price action here, pretty much a backtest. I think this is on breakout, but it's backtesting. seems to be waiting for earnings. Earnings coming out next Wednesday. So if I had to guess, which is what that would be, earnings is going to be perceived as positive, and you're going to get a big gap up on the earnings report. All right. And it seems like it's probably going to just chop around into earnings, but I can easily see this thing gapping up to the 200-day, possibly above, and starting what looks to be a breakout from this downtrend. So if I don't think it makes sense to go in huge position right ahead of earnings, but maybe a starter long. It's probably going to grind around a little more until Wednesday. So, but in general, looks to be setting up for a breakout. So if you want to get ahead of that and take the chance ahead of earnings, there's an opportunity there. Doesn't mean it's going to gap up on earnings. The charts just are bullish. It's set up bullish, so it tells me higher probability it's going to gap up. Okay, I'm going to wrap it up there, put the video out. I'll catch you guys on the next one. Take care.